Hey everybody, good afternoon. This is 12-minute trading with Doc Severson, and I've got Dave Lukas over here. Today is Tuesday, the 7th of February, and we had yet another virtual Fed meeting today. Jerome Powell got interviewed today, and the volatility is just off the charts one more time. So it's been all over the map today. We've had well outside the expected move range of price action today. And it's people's heads are swimming. They don't know which way to go, which is actually perfect for our strategies because all we did all day was close positions. This is what we do. We play range-bound positions like this, and we were just closing stuff left and right, which is good at profit target. Dave, what are you seeing in the market?
Well, it looks like we've pulled back enough and looking like we may be continuing the weekly swing higher. So we'll pull up the charts here in a minute, but these weekly energies still have a lot of room to go. And so we hit the upper Bollinger Band, right? And that acts like the ropes of the boxing ring, and usually throws a price back inside of it. And we hit that Friday. We saw that. We saw that yesterday come back inside those bands. And now we're kind of consolidating a little bit, getting ready for kind of the next run in this weekly swing. So everybody that's like, oh, it can't keep going higher and we're just going to, it has to pull back and we have to have a really big correction. It doesn't have to do that. What would be healthy for this market would be a 3 to 5% correction. That would actually be really healthy for it. If it does continue to just go parabolic and go even outside those Bollinger Bands and keep going like that, it will come down pretty hard. But it will go as far as it can, as long as it can before it does so. And so you have to be prepared for that. These type of runs that really are fueled by fear of missing out, retail traders jumping in, they're the ones that usually fuel the end of it. Then the rug's pulled out from beneath them. You get that correction, and things settle back into normal. But as of now, that's what looks like we're doing. Looks like we're heading higher.
We've been through this for again and again over the past 20 years, and we always hear this expression, the most hated bull market in history. And that's usually what happens when, number one, traders miss out on it. They don't see it coming because they're too negative, and all of a sudden it goes in the opposite direction. And so therefore it feels, it creates these feelings of, I don't know if it's jealousy or, they're trying to get, revenge or something like that. Like, hey, that's not allowed to leave without me. So therefore I'm going to disparage this bull market. And I've seen it so many times where it's like you personalize a price action that you didn't expect, you didn't see coming. But like if you replace some of our sessions going back to December, we were sitting there going, hey man, if this sets up as a weekly higher low, this thing is gone. And because everybody is negative everywhere we looked back in December, well, it's a foregone conclusion that we're going to be in recession in 2023. And I agree with all of those statements, but the problem is when you see the same thing coming from everybody, the market has to go in the opposite direction. So is this the breakout that we've been looking for the past year? Maybe
it does look like this is a paradigm shift. Definitely, the character of the market has definitely shifted, and these do mark the turn from like bears to bulls. Now, the thing is, we could make this move and that could be kind of it for the rest of the year. We could go sideways. It'll still be an up year and we could go sideways. We could see one of those years yet. It doesn't have to go up 70% from the bottom. It doesn't have to go up to new highs, right? So I wouldn't say that yet. But the one thing that we have to watch is we've got a monthly chart that's fully charged. And if that kicks in on top of this, then that has the power over the next year to easily take us to new highs in the markets. And how crazy would that be for people? How crazy would it be if we turned around after this last year and then just went grinding, screaming higher to new highs in the market, right? Now, again, if you look at markets over longer term, that would be almost like parabolic. I don't know if that would be healthy in the end, right? But it's certainly possible with the amount of pent-up energy in that monthly chart. So you probably should bring those up and we should show that to them.
I'm gonna do just that. So today the S&P is up 1.1. We have the Nasdaq, which is really driving things, up 1.8, and so nothing else is comparing. I'll bring up the Nasdaq chart in just a second. But what Dave is talking about is this big potential of the monthly chart to get going here. And we're seeing the same thing with a weekly chart. The weekly chart, this is a higher low, higher high combination. There's no doubt that this is a change in polarity back up to the upside on the weekly chart. That's extremely powerful. So we saw this happening back in this higher low here at the beginning. I'm sorry, this is around Martin Luther King Day in January. When this happened, when we had the higher low, higher high combination, that's a big change in polarity to the upside, broke through that descending trend line that everybody's been watching. So what we're talking about in terms of energy is more about this this daily chart rebuilding up energy over the last couple of days by the pullback. It almost creates this sort of slingshot effect where you pull back on a rubber band and then it goes flying away. Everybody gets all bearish every time we pull back for a couple of days. And as Dave said, that is a big change in character for this market, that before we were not seeing the higher lows. We were setting up lower highs and then rolling over, which could still happen potentially. But right now, based on where we're seeing, would expect this to break out above 4,200.
Yeah, but we don't have those. We now are getting to where we're seeing, not lower highs. We're about to break through the last high, right? Or going above the last high. In fact, look at your weekly chart there, you can see the last high that we had, right? We were basically breaking through that. Now we're above that, right? So that is a paradigm shift overall in the markets, regardless of if we go much anywhere from now. It's definitely a change in character. So there's been, I think, a few times in history, if I watched or looked back in history, where we've had a market do what we've seen and then fail back over again. It's very, very rare, but like we're talking like Great Depression was like one of the times we saw that, right?
Yeah. So what Dave is talking about here is that, here's the coming from the low, and everybody at this point, as we dropped into this low in mid to late December, everybody is sad face and thinking, well, this is it. We are heading back down to 3,500. There's no question. In fact, what was the most popular Twitter post at that time, Dave, around that?
It was. I think it all was like 3,000 SPX and stuff. Everybody was calling for,
But it was the 2000
final capitulation.
It was the 2008 analog, right? So everybody was talking about how this move was going to follow the 2008 analog, and then all of a sudden, the market, it's almost like a receiver in a football, field, like just pushing off on their right foot and just digging.
And the thing was, it was following that analog. Both the VIX and the S&P were following that analog almost to a T to that point. And then they diverged. And a lot of people were like, well, it can diverge a little bit and it's going to, you watch, it's going to happen. It doesn't have to. And it didn't. And that's where things really started to get, I think we looked at each other, and that was December, like, okay, we've got a changing paradigm. We now have a lower high. This is the first time in a year that we've seen this. So this is different,
So the higher low, higher high combination for this. And also just looking at the last couple of days, one of the things that I was talking about in our trading rooms was what I want to see is I want to see the price put in a nice little consolidation between 4,100 to 4,200. I know you were looking for something a little bit deeper than that. But actually, the most bullish form of consolidation is where it goes what's called high and tight. So a high and tight from here would be extremely bullish. Now, to this point, we've had more of the slingshot type pullbacks. So all these pullbacks have more been slingshots where you build up excess negativity, and then it gets unwound by either news or something like that. So this is the first time that we've gone into a small range like this. And I'm kind of with you. I hope we don't break out just yet. I hope we spend a little bit more time in this range. Selfishly, we can sell against it, number one. Number two, this is going to help build back up the falling energy that's on this chart here in the weekly. So this is going to be a problem here if this gets ahead of itself and gets above 4,200. Then
the healthiest thing for this market would be to grind higher at a slower pace.
Yeah. Yeah.
just a quiet and trending, as we like to call it,
Yeah.
type market. And look at that. Go to the monthly chart, because again, now that we've seen the weekly's told us what it's doing. The weekly has released, right? The weekly is released. We got an upside trend. We're probably about a little over halfway through that trend. And then you look at the monthly, and that's the next phase of this whole thing. And it's starting to roll over. It's outside the trend line, like you're showing on the screen. And if that starts to go, these swings in the monthly go 8, 10, 12 months.
So we got to get
Right?
above
So-
43. The market's got to break above
Yep.
4,300 to set to change the polarity, because we're still coming from a lower low. So this could still be a lower high. Again, we're not 100%. We don't sit there all the
Yep.
time and go, well, this could happen and that could happen, because then we'd sound like a bunch of economists. But you have to see both sides of a market move to be able to, so you're not surprised, right? Because that is where a lot of retail traders get it wrong. They go all in on one direction, and they don't account for how of the other directions that it can go. So this certainly could print a lower high, and the way that we'd know that is because this would put in a lower high as well too, and then start to roll over. But we'd see that first over at the daily chart. The daily chart would put in a lower high, and then we'd see a lower high set up on the weekly chart. So it all begins as a progression. This is what we call the
inside out.
Yeah, right. Reversals start from the inside out, which is rule number 2 of fractal energy. So
Another thing, if you pull up real quick, I think this would be good for people to see too. Bring up the rut on the 3 charts. The Russell a lot of times is like the canary in the coal mine. It moves ahead of a lot of the other indexes. And so if you watch the Russell, you can get an idea of where kind of things are going. So you can see the Russell is pretty exhausted when it comes to the daily chart, which is why it's not moving it like the rest of these indices are this week. In fact, the Russell has been down a lot more than the others have. And you can see that it's almost exhausted out on the weekly, right? It's gone pretty far. It's almost exhausted on the weekly. And then, here's your reverse head and shoulders. And then you can see the monthly, though, is starting to tick down a little tiny bit. So if you want to see if the monthly and what the monthly might do with the other charts, watch the Russell over the next month or two and see if that chart starts to get down in the 50s, right? In stuff like that from a monthly standpoint. And that'll tell you, it doesn't have to go much further. About 2100 gets it above its level to kind of confirm that we're going to be going trending higher and getting back to a real bull. So, but yes, big old head and shoulders patterns here.
Yeah, and we're getting
neckline is broken,
and they're fractal too, which is the really cool thing is that we've got this small one on the daily chart, which works in as the entire right hand shoulder of the larger one. So it's patterns within patterns that we're seeing right now.
Well, and you can, and so like if students are watching and stuff, you can understand, like I just put out one of the double trades that I do today, and I actually picked to do it on the Russell. And the reason being is that the Russell is more exhausted than the rest. So it's got to pause for, probably in the shorter term longer. And so it's a good time to put a big wide, like iron condor, like a double on that, because it's probably going to waffle around in there, but it's going to have trouble really breaking out to major levels and stuff, because it's just tired at this point. Right. The NDX is there too. You can see it, on your chart as well. And that makes sense. That's what's led this. Now, if you put the Dow in, the Dow is actually like the DIA fully charged up on like the weekly chart. It's getting ready to, break out in a direction. So it'll be interesting to see where that goes.
Yeah. So watch this carefully, because I've seen this happen before.
See that?
Right now, everybody is watching this pennant pattern on the Dow, and it's got a massive amount of energy. But the one time I remember like such a perfect pattern like this, what actually happened was we saw this happen. We actually saw it break to the downside, go to the 61.8% retracement of that. So it went something like that. And then it just the mother of all slingshots from that point. So this is actually a valid pattern from here. It builds up a tremendous amount of fear and then eventually resolved to the upside. So that was a pattern back in the fall of 2011 I believe. But I've seen this before because everybody right now is expecting a breakout on the Dow. And that
I could see the
breakout's,
Dow doing that as well. And some of that is just catching up from sector rotation out of the Dow into the growth stocks.
yep. Yeah. So if we see more of a rotation out of the Dow, then we may actually break to the downside on this thing. If the Nasdaq is going to be the leader once again. So whether or not it's, because the Nasdaq is just so destroyed over the past year. So market leader, such destruction. Let's take a look at, literally we're taking this swing all the way back to 2008, 2009. Look at the fibs on this thing. So I wonder, this actually I have not done before. Look at the monthly fibs here. Going all the way up to the top. Look at this. We had a 38.2% retracement of the entire thing. Wouldn't that be something if we explode off of here? So there's all kinds of possibilities, right? So the one thing I was talking to my room about this morning is the thing you got to do is you got to stay out of the news sites. You got to stay out of the news sites because the news sites will poison your mind. They will force you to, narrow your thinking where you're only got one direction in mind. And, let the price tell you which way things are going. If you understand how to read price action like we do, then it's all just an unfolding puzzle. You're just watching things unwind. You're untying the Gordian knot of this ball.
Yeah, just beware parabolic, right? Parabolic is bad. You want to see it go up some, pull back a little, grind a little bit, and then go to the next level. Like stair step is really good. Straight up, like through those Bollinger Bands, a really, really bad sign. You could take advantage, get ready on the backside. In fact, I was saying that last week. After Wednesday and into Thursday, I was putting out on Twitter. Even did a little video, short about it on the YouTube site about how this thing has gone too far too fast. It's time to play the downside, and we got that right. Did really well playing the downside on that thing.
There's actually a great little lesson in this chart because what I've seen all the time is some of the strongest moves that you will see come off the bottom. So this is what I call just strong off the bottom. And the reason why it's strong off the bottom is because the smart money jumps on board and all of a sudden the dumb money, which is short down here, is getting destroyed. And then that goes to what I call thick in the middle. And thick in the middle is where it's just a toss-up between the two sides. Bulls and bears are duking it out. It's not truly into acceptance yet where everybody agrees that the rally, it still could fail at any point. And then eventually we get into acceptance and then euphoria. And we see that cycle all the time. So right now, all we've done is just come strong off the bottom. For this to actually go into acceptance and get into that kind of thick in the middle section, we're not even there yet. Yep. So that is what I would expect to see this spring. If this continues, is get into a very choppy area up here. And this will allow not only the weekly chart certainly to recover, and that's going to take several weeks for that to occur. And then once that's ready again, we may see yet another tail as we kick into acceptance and then euphoria. So I'm really looking forward to what this market could do for us this year. Certainly am.
I think you said it, man. That's really kind of where this is at. It's definitely had the paradigm shift. It set itself up. Now I think we go through a period where we're going to exhaust some weekly energy, maybe a little bit more upside, through this week and into next where it gets exhausted. And then maybe we walk sideways a little bit, get ourselves charged back up. In fact, as we get into next week, the daily chart will probably be charged back up, and that actually would line itself up for a pullback a little bit, and give us that maybe 3 to 5% pullback.
Right. When you have a weekly chart, which is exhausted, and you got a child in the back seat, child time frame all charged up, got to go somewhere, probably going to go down.
Yep. And so then you've got, things maybe go down a little bit next week, and then, another week or so of chop, and then you're back to trend again. And maybe the monthly starts to kick in then into March, because that's where you're at by then. So it's going to be it'll be an interesting time to kind of watch and see how these play out. But I just beware this thing going too far, too fast. That's what you have to watch out for.
We got a lot of people on the wrong side of the tape today. We got the NASDAQ.
Oh yeah, they're all covered. They're all covered. You want to know why? Everybody was putting put side in ahead of Powell.
Yeah.
Everybody was hedging their bets ahead of Powell, and they're having to cover now.
Yeah. So we're up 300 points on the NASDAQ, 2.4%.
Yeah.
Wow. What a move.
Yeah.
What a market. All right.
Probably give some back tomorrow.
Yeah.
But, yeah.
Probably will. Well, so thank you for those of you that joined us live. Welcome aboard, and thanks for joining us live. And, we do take questions on these. If you have any questions for us, please let us know. Or you can submit them in advance for the next time Dave and I get on board, which is probably going to be next Monday. And we'll do that then. Or if you're watching this on a replay, again, we love the interaction. Just chat in and let us know that you're watching this on a replay, and let us know if you have any questions or if there's any topics that you would like us to address. Next time, we are your full service market trading analyst firm here. So thanks everybody for joining us here on Tuesday, the 7th of February. You guys have a great week. And so from Doc and from Dave,
take care.
we're out. Thanks everybody. Take care now.
Bye.